Hey traders, this is Christian from Tribeca Trade Group, and today is Wednesday. Let's get right to the market recap here. Risk disclaimer in front of you. Everything that we are going through is for information purposes only, not giving out any advice or recommendations. I'm trying to talk fast. I want to keep these videos a little bit shorter, but today was the Fed day, right? That's, of course, the main attraction for the day is what the Federal Reserve, what they're thinking, and first of all, they raised interest rates by 50 basis points, which was exactly what has been priced into the market for I think since the last Fed meeting. Here's what this looks like going forward. And I'll give you my 2 cents, as I always do in these videos, about what I think, but they're implying another 25 basis points. So again, it looks like the rate increases are going to be slowing down in terms of how the market is pricing this in. So February, probably another 25 basis points. It says 30, probably erring on, hey, we're going to have another inflation report that comes out, another batch of inflation reports, the CPI report. I think that comes out January 12th. So that's like, halfway between actually, right? Is that right? I think it is. Yeah, January 12th is when we get another report. So it's kind of halfway in between the next Fed meeting, which is on February 1st. And then you can kind of see the implied rates, we're looking at not much basically after that. And here's where we are, which is 4.3%, which is what the Fed fund, which is now what this rate moved to, right? And then we're topping out around 4.8, 4.9, so give or take 25, another 25 after that basis points. And that's basically it for now in terms of what the market is pricing in. And right. And then it could be like a plateau, meaning that rates kind of stay where they are for a little bit, and then maybe start coming back down towards the end, ever so slightly, of 2023 and the beginning of 2024. So that's the picture for now. In terms of the press conference, which always seems to be that we get some type of information. And I was just listening to Jeffrey Gundlach on CNBC, the Fed doing, exactly what they needed to do. I mean, we've had one inflation report that came out this week that showed a little bit of a move down in inflation. And it is a, it's a work in process. You're going to hear me talk a lot, and I have been talking about in these videos about patience, right? I mean, right now, this is a very sideways market. We've been if you've been listening to my videos this week, you know that I've talked about the S&P has been going sideways for just about 5 weeks now. And that's really going to test your patience. One of the things, and this is what I send members, we do a whole macro. We do 2 things at Tribeca Trade Group over the weekend. I put out a macro video, and I talk about price and trend, and then some of the under the hood, some of the indicators that I tend to look at. You can see one of the things that I have highlighted, and I have this in the conclusion just about every week. But I said, I've been saying stay positive and patient. Bear markets will wear you out. And I think that's the price action that you kind of get a sense for most traders, especially, most traders, that this is the first real bear market. It does really test your nerves. And I think I made this analogy probably a month ago or something like that, to use the Top Gun analogy, right? This is the Iceman market. This is not the Maverick market. Meaning, Iceman, going back to the top, sorry for the cheesy analogy, but going back to the movie, the first Top Gun movie, Iceman wears you out. And then, waiting for you to, the market seems like it's waiting for people to make a mistake, right? And you've got to stay cool and calm, and you can't be the Maverick right now, in terms of, high risk type strategies, All right. So that's what I again, I apologize for the cheesy analogy, but it's a great way to kind of look at this market is you just have to be more defensive. You cannot 2020 when the wind is behind you, when the Fed is expanding, is an expansionary time, not in a contraction period, right? Then you could be more aggressive. And as the saying goes, don't fight the Fed. Right. And so that's kind of how this market has been. So, I was talking to a lot of members today and, just kind of understanding what everybody's going through. And that's, so if you're frustrated, if you're watching this video, and by the way, if you're killing it in this market, if you're selling the rips and buying these little dips, that's probably been the best thing to basically do. And like today's a good example of that. Look at the range. I don't like really the market being up into the Fed meeting. It just is a recipe for kind of, I don't want to, it's not a recipe for disaster. It's a phrase that comes to mind, but you could see, I mean, why we were going up, and I don't know, probably a little bit more short covering. If you looked at the best performing ETF before, on my watch list anyway, the best perform, and I'm surprised this is on my watch list, but it is. But the best performing ETF that was on my watch list going into the meeting was the meme ETF. Right. And that's not usually a good sign. That means that there's just kind of a lot of short covering. Granted, the best name in that ETF was what's the company I never traded, this small financial company that everybody seems to love on Twitter. SoFi, right? I think there was an insider buy by the CEO of SoFi, which kind of got that that was the best performing group. But again, so what did we do? How did we play that, considering that we were at the top of value on multiple time frames? So that was just the 5-minute that I just showed you for S&P. But here's where we are again. Right. So the price action was pushing into that 200-day moving average, right? Clearly was rejected. We're back inside value for the month, right? And that the market just is not ready yet to take that next leg higher. And again, here's, this was back on 1110, right? When we took out this virgin point of control, which was a lot of volume. And it's been like a magnet. Right. And sometimes virgin point of controls do that. They kind of keep the price action steady and holding there, really until we either have some other type of catalyst or, the price action just kind of is able to get over that resistance. So 4082 in S&P futures, that's the top of value. That's the barrier. And that's lining right up with the 200-day moving average. Again, those two things lining up, and, and a lot of times when the moving average is like a major moving average, like the 200 or the 50 lines up with either the top of value or bottom of value, in my opinion, it becomes more significant. And I think that's kind of what you're seeing here this week on these attempts to push higher. Right. And I think also, no, we were above value. So again, we can look at a little bit of the NASDAQ too. But I thought that this was telling, because again, the price action was kind of whippy, but we held basically where we needed to, right? So if you're looking for a support level, I got one for you. It's 11,824, right? We've been kind of coming in here, and by the way, take a look at that BPOC takeout, right? That's actually a little bit of an older one, right? I go back 180 days. Right. And you could see this virgin point of control is from a long time ago. Someone asked me, which I get this question every couple of days, what's a virgin point of control? Well, it's where a lot of volume was, it's a point of control. A point of control is where a good portion of volume occurred in a given period. So I'm on the 1-hour chart, right? And every value area is for the week. And if the price is not revisited, a point of control. So take, for example, this one in here, right? Notice how price did not go through this value area at all. And it did not cross over the point of control. If price does not take this out, right, and cross over this during the period, then what happens is in our indicator, we automatically extend a right line from that point of control, and it becomes highly significant, right? Because it's almost like, when you're dealing with a gap, right? A price gap traders like to say all gaps get filled at some point. It's the same type of concept, right? If there's a big volume area and price gravitates away from the big volume area, eventually it will come back and it will be significant again. That's the idea of the version point of control. And, I point these things out in every one of these videos. There's probably one, I talk about a version point of control being taken out, right? And there was the one from yesterday. So at this point, right, we're sitting on support. Could support get broken? Of course it could, right? And how you really use the value areas is there's significant support and resistance, right? So I make decisions like if we break into value, we close into value, right? That's a short, this would be a short opportunity, right? And then set your stop to the top of value, right? And that's just, it's a very kind of, once you get your arms around it, it's a very simple indicator to use, and it's really using significant levels to make decisions, right? That's why it's so interesting. Okay, so that's NASDAQ. I haven't really been paying that close, like I haven't really been trading the small caps, but they've been weaker. And you could see that this was in line with the performance of the indices today, but this is inside value versus the NASDAQ for the week being above value. And I think same thing for the S&P, which also touched that top of value and held. Okay, so that's where we are in terms of the indices. And again, if looking for an adjective, sideways, choppy, that's kind of best way to describe that. Now, eventually we will get out of this range. It's going to happen, but you just have to be patient in terms of that, right? And maybe some either long or short opportunities will develop from that. So to be a little bit positive here, I would say, hey, I'm glad that we got the Fed meeting out of the way. We didn't really learn anything new. We have the interest rates kind of mapped out for the next couple months in terms of the expectations with Fed fund futures, but we really didn't learn anything all that revealing for the day. They have to stay the course and make sure inflation is headed down. Okay, so that's the case there. We can look at a couple things. One other optimistic note too. I was kind of thinking about this. Mobileye had a very nice day today, and one of our traders was really set this up pretty nice. I did not trade this name, but it's been acting very well. Even though it came off the highs, it was up 2.2% Mobileye, and it's really like one of the last IPOs I think that I've really looked at. And that's one thing that's a good thing, is that we're not getting that dose of several IPOs coming out like we saw about a year to 2 years ago, right? So there's not a lot of new supply that's coming out on the market. Remember what happens when there's big IPOs. Big funds, what they have to do is they have to make room in their portfolio for that new IPO, and they usually sell some things. So that's one positive that I was just kind of pondering for the day. Areas that showed some strength today. Well, first of all, we talked about this in yesterday's video. You could see, I've got red on the VIX. This is what's called VIX crush, right? Or volatility crush. And if you didn't watch yesterday's video and you want to know more about how that works with volatility, I said if we didn't get anything that revealing out of the Fed, you would see the VIX go down pretty decently. That's exactly what it did today. All right. Here's the trade. I think I mentioned I would talk about the trade that we did for the day, considering that we were at that top of value for the day on multiple time frames. This is how I set this up, right? Basically looking at the measured move, right? So we priced this out that Qs were implying a 2.2% move, right? We took the price of those options that expire today, and we got the measured move to the downside, right? And here was my lotto type trade, right? To participate. What's nice about these butterfly spreads, that you don't have to invest a lot of money. Right now, again, you have to get the direction right, and you've got to get the measured move. They're not high probability, but they're high reward when you get it right. So here's the results of this. I took this off for 60 cents. I paid 19. Again, not big trade. That's why it's called the lotto trade, right? And I think that I took the last target off for 33 cents. at the end of the day. So, that little trade, that was something that we set up in the midday session. That's, the value that I try to add to traders is a couple trade ideas where they can make some money in a difficult market as this is right now. And here's the trades that I did today. I've really been trying to keep it light in terms of trades. I mean, I do like to trade, and I try to trade to give traders, some ideas of what I'm looking at. But let's start with Moderna. This is not a name that I've traded in a while, but we sometimes stock specific moves get lost a little bit when you have a big macro week as we did, right? There was some really good news that came out yesterday on Moderna, and working with Merck and their drug. I think putting the two drugs together, right, and learning that that this is working on skin cancer, right? That they're having good results so far in clinical studies. So this is the daily chart. So what do I like about this daily chart? I'm just going to pause this video 1 second. And we'll do this backwards. We're looking at the daily chart first, and then I want to look at the weekly chart. First of all, we don't have a weekly closing bar yet. We've got 2 more days of the week, so we can't really draw any major conclusions yet for the weekly close, because we still have more information to go. But looking at the daily chart, so here's one of those VPOCs that came in, and there were some traders trading this yesterday in the room, and I kind of thought, oh geez, we're taking out a VPOC that might be as high as it goes for now. But the prices actually got above there, right? And look at the volume to the last couple of days, right? To me, that's what we want to see. That kind of confirms the move. Now, of course, we're going to need to see a continued push over this virgin point of control, and I wouldn't be surprised if it does digest a little bit. But I really like the base and coming out of the base. So I day traded this. You could see, Moderna. I mentioned that it was just for a scalp for the day, and it worked pretty well. I was just playing it through a move through the 5-minute value area, and it did more than that, right? So sometimes I know this happens to traders where they get involved in a trade, they take profits, they make money in it, and they're like, oh, geez, I shouldn't have sold. I shouldn't have sold so early. Don't worry about that. Right. Constantly think about where the stock is going. Forget about if you could have made more money. So what I did is I put the trade back on, right? This was just a day trade and a scalp trade at that. So I said, hey, I'm going to start to leg into this a little bit. Right. And I'm in no rush with this market. So this is a starter 211. Right. And I said, I will add once kind of things settle down. But look at the weekly chart. Here's what it's exciting. Right. So this, we've got 2 more days left of the week. So if price can kind of stay where it is, then you will see me probably add to the trade, because then I know it's going to close inside value. Also, you could start to cheat ahead a little bit and look at the value area for next year. I don't think it's going to change shape that much in the next couple of weeks. But as long as it holds above 178, then you've got maybe a longer term swing trade. And or at least for me, that's what I'm looking at. And again, if we're looking at the weekly chart, which I'm thinking longer term swing, not a day trade anymore. Okay. Right. So some traders get this wrong, where they put on a trade just for like 2 days. They're looking at the weekly chart. Right. If you're trading that, of course you could look to see what the picture looks like on the weekly chart, but really the weekly chart shouldn't be much, shouldn't really come into play for you that much, because you're not on that time frame of holding it for a couple weeks or something like that. Right. So that's the story with Moderna. That's my favorite setup, and something that we went over in the trading room earlier. Very nice by a couple members who brought this to my attention earlier. Thank you very much for doing so. And hopefully we have a nice setup on our hands and nice follow through from the setup. All right. A couple other things, I've been watching Workday quite a bit. Workday's kind of has a W pattern. It does have to get through some further resistance, as a lot of these names that have fallen from grace, but I've got a level to trade against. I've talked about Workday a couple times the last couple of weeks. Now, I did not close on the highs, but I will be long versus the 200-day moving average. If it breaks back below, it is what it is, right? It's just, we're dealing with a very difficult market, and position size is really important in this market, so that if you do put on a trade and it doesn't work, Now, you don't want to have a huge loss, right? You want to have a paper cut loss, right? And then move on. But, you know, I've tried these trades, you know, full disclosure, right? I went long. I don't know if shop's back above. Nope. You know, like I tried shop above the 200-day moving average. It didn't work out and I got out of it in here, right? So it's the same thing. It's not predictive. It's you've got a setup and you're going to play the setup out. Right. And for now, I'll be long versus workday and versus that 200-day moving average. Also, the charts are kind of slow to adjust here. DXCM also looking kind of interesting. Right. This was my trade of the week last week in terms of, I think it was one of my most profitable trades. But it's trying to kind of recoup a little bit. Right. Speaking of epoch, just perfect on the daily chart and on the 1-hour chart, which is exactly where I took my profits in this thing. Right. Again, in this market, it helps so much to know where exactly that overhead supply is. And I took this target. And you can kind of see, if you don't believe me, we can go back into the trades channel from last week. Right. And I got out at 126. Right, which was very close. So I didn't catch the high perfectly. I got out right in here, 126 on the DXCM. So it did not close. Unfortunately, it did not close above value. So we'll have to keep tabs on it. But I do like the setup in it, and I like the name. Right, I like the medical group very much. You know, a couple other things that I was watching today in this group, which again seems to be acting very well. No position, just, you know, again, a lot of what we do is you look at a lot of charts and it's only playing the best hands, like a game of poker, right? As far as professional poker players, they don't play every hand, right? If you're familiar with that analogy, but poker players do not play every hand. Really good players, they fold until they have a good hand, then they play. So Bristol Myers, you got a nice dip here. I'm not ready for it quite yet. Last group I'll talk about, this video I knew was going to be a little bit longer when you've got a Fed day today, but the solar group did very well today. Unfortunately, I didn't get this one perfect. I was in for solar and I think I traded it for a day trade on Friday. It's, you know, something is said sometimes when, even if you don't take the trade, if your analysis worked, right? Here was the virgin point of control takeout, and it took a little while. It took a couple days for this to reverse. Again, notice how it hung out here for a little bit, right? So it did move up to 151 to 160. It went up without me, so be it. I would be selling into this move because now you got resistance up at 162. And the stock that everybody seems to be talking about is this Array Technologies, another solar name, you know, smaller cap name, breaking through the value area for the month. That's a name definitely to watch. I like the volume that happened on this one too. Of course, the ever popular ENPH. I know there's a lot of eyes on this stock too. I've kind of given up on this one. I have this in the TTG trend portfolio, right? But as far as trying to time trading in this one, it's gotten just very difficult. So I just, sometimes when names get too difficult, I try not to trade them in terms of in my trading account. Better some of these things to just hold, you know, as long as they're continuing to work. SEDG, by the way, which you don't hear very many people talk about the stock anymore, but this has been acting very well since it reported earnings. All right, guys, that is it for today's video. So again, I can't emphasize enough, like if you're getting worn down by this market, you know, that's what bear markets do, is they do wear you out. Stay patient, stay positive, and you know, we'll get through this bear market. It's just a matter of time. Have a great night, everybody. See you tomorrow.